Hello everyone, just going to do a video this week about random entries. There was a good post about a system of random entries with a 3-to-1 risk to reward having no edge and essentially over a long period of time at best you'll break even and probably lose spread. And you know the point of the post was that what we're doing is random entries, so we're unlikely to have an edge over time. So I just wanted to go into some detail about why although it appears like we're taking random entries, they can still have an edge because of how the market moves. And if you look at studies into explaining the movement of price in currency markets and in all markets, essentially, the conclusion they come to, and I'm simplifying here, is that price moves in a seemingly random walk, and then it has a period which is called a Levy flight, where it just appears to shoot off in one direction, and then it kind of wanders around for a bit, seemingly directionless, and then it will make a Levy flight, and then a Levy flight, and then sometimes these Levy flights go on even longer, okay, and then random walk and Levy flight, okay. So that's what price, those are the patterns that price moves in, okay. Now if we just took a bracket trade on every bar, okay, we put a bracket trade, a sell at the low and a buy at the high, like this, okay, in a random walk type of movement, you can see that we're going to just take a lot of losses, okay. But then eventually you get a Levy flight movement like here, okay, and then when the Levy flight occurs, you'll find that your bracket trades just trigger in the direction of the Levy flight, okay, and the idea is that you will get enough Levy flights and make enough from them to pay for any losses you make in the random walk sections, okay. And I did actually do a little test on this sequence here, okay, and this sequence using 4-to-1 risk to reward or the end of the week makes profit, okay. So these Levy flight periods will tend to pay for these random walk periods, and you'll also get some trades in this section here, like this long would have triggered and stopped out, but then the short would have gone down into profit. Same with this long stopping out, this short going down, and this long stopping out and this short going down, and so on, and this kind of evens out the damage that occurs in these random walk periods. So although the way the trades are put on appears to be random, it's the price movement that we're trying to capitalize on. We're saying, okay, the price movement is where our edge is going to come from, not from deciding when and where to put the trades on, and that's the edge that we try and capitalize on. And then, you know, if you just have a scan through charts, you'll see that you often get these Levy flight periods, okay. Sometimes they're shorter, sometimes they're longer. You could perhaps say this was a bit of a random walk, it's drifting up, if you like. Here you can see you start off with a bit of a random walk and then a Levy flight, it goes random again for a bit, and here you see you get a Levy flight and a Levy flight and then a bit of a random walk, and here a Levy flight, bit of a random walk and another Levy flight, and then again here nice strong long Levy Flight down here, and then we kind of go up and down. It's kind of a bit of both there, but you'll see that these happen a lot, and that's where you're going to make easy money. And the idea is that you'll make enough from these movements to cover the random walk periods. And also you can apply some other tactics to take advantage of it, and something like having like a flexible your exit strategy is going to make a difference as well. So basically what we're saying is it's your trade management, your position sizing, and the market movement that's going to give you the edge, and that's the premise you're working on, rather than on analysis prior to entry. Okay, rather than saying, right, I'm waiting for a certain thing to occur, and then this pattern is likely to work out with normal market movements. So you need to decide if you believe in this random walk levy flight thing, and whether you believe the system takes advantage of it. And once you kind of get that core idea, it's quite easy to build other systems on that. I mean, you could put in a moving average and say, when the price is below, I'm going to try and take advantage of the levy flights by just adding shorts. Okay, and that kind of just adds a trend element. And so yeah, that's it. That's my idea on this random entry point. And the point is that it appears like we're trading randomly, but what we're doing is we're trying to capitalize on a particular market movement that occurs a lot. And that's it. So leave me your comments below, and I'll see you all soon.